Welcome back. Let's talk about Pidilite. Pidilite Industries reported a good set of second quarter numbers. The margins were sharply higher than what the company reported same time last year. But the stock is at the low point of trade on account of two factors. One, the valuation. Secondly, also the worry that the company has gone ahead and opened an NBFC for its ecosystem. We have Mr. Bharat Puri, who's the MD of the company, joining us now. Thanks a lot, Mr. Puri, for joining in. While the numbers are good, but you surprised everyone from by this, lending to this ecosystem sort of announcement. How do you think the street should look at your NBFC foray? No more than just a formalized way of vendor financing, right?
Absolutely, yes. I mean, just to give you a sense, all of you are aware that Pidilite has this deep connect with its ecosystem. We are one of the few companies that has deep connect with its users, be they carpenters, be they masons, be they tile layers, so on. And obviously with the whole dealer ecosystem, and this ecosystem obviously deals in a wide range of products. Now, for a lot of time, we've had this demand from this ecosystem that, listen, we at times have this need for short-term bursts of capital, for short periods of time. And there is nobody better than you people who knows us, knows our payment history, knows exactly how much we buy, what's our capacity. Now, therefore, this is an absolute logical step going forward. It's from a capital allocation point of view, very small amounts of capital. In typical Pidilite style, we will first pilot this in one geography, understand, so on and so forth. This is a venture we want to also keep at an arm's length from the core Pidilite business, so it will be housed separately and run separately. But you would see that it obviously will deepen our connect, hopefully build further loyalty, give us even further information. And there is nobody else who has this information on this ecosystem, which will enable them to be able to do what we're able to do. So it's just a logical step forward. And, in Pidilite, we always pioneer new opportunities. This is an opportunity which, in our way of thinking, is not a large opportunity, but the right thing to do for us as an organization as we move forward.
Yeah, we get that. But, with an NBFC also comes its own risk of regulation, right? And then there is this risk of recovery, management bandwidth goes away. Just wanted to know if the benefit of this will perhaps be outweighed by the risks that are there and the management bandwidth that you're talking about.
From a risk perspective, the reason why we're doing this is because we know this ecosystem. We have the information. We've dealt with them for years. We know exactly how much they purchase, what's their buying history, what's their payment history, what is their credit worthiness, so on and so forth. And obviously, in such a business, we are clear that management bandwidth on the core business should not be impacted, which is why it will be a separate venture housed separately, but focused only on the Pidilite ecosystem, because very simply, this is where we have, in our view, a massive competitive advantage by just the nature of the information and the relationships we have with this ecosystem. And therefore, that's what we're going to do. And again, to confirm this, we will first actually just pick one small geography for the next 6 to 9 months, actually in that geography, test all of our assumptions, see their work. We will be in a much better position to answer your questions, both on risk profile as well as management bandwidth. But frankly, we don't see that as an issue because all of these people are known people. This is not a new business for us. There is nobody new that we will be dealing with in this business.
Okay, got it. Mr. Puri, let's talk about the overall business, right? What does the second half of the year look like for Pidilite? How has October been so far? And what is the kind of sentiment that you're seeing on the ground?
So as far as the second half is concerned, we are clearly seeing some tailwinds with a buoyant construction sector. The real estate sector seems to be back. There is therefore a large amount of spending behind that. The government spending on infra is helping. The festive season is a longer festive season, though. I wouldn't go too much by October sales because, frankly, October last year was 3 weeks of sales because Diwali was in October last year. I'd rather look at October plus November, and the jury's still out to see how is October, November this year versus last year. But overall, we are fairly optimistic that it looks good. If you look at even, a quarter like the second quarter where we had this erratic monsoon, we had lots of disruptions because of this uneven distribution of rain. We've still logged healthy volume growths. The only tailwind that we see is the geopolitical situation. Hopefully, if the situation in the Middle East doesn't go out of hand and input prices, crude prices remain stable, I think the second half should also be a period which is good.
Okay. So what's the average input cost price like right now? What are you expecting? And given the kind of geopolitical uncertainty, do you think that input prices could be volatile in the second half of the year?
See, VAM prices have slowly and steadily come to what I would say is a low. In fact, they're slowly beginning to inch up. They were down to virtually $850 to $900 a ton. They're slowly inching up by $50, so on, because it was becoming unviable for some of the international plants. As long as the situation in the Middle East and crude oil doesn't go out of hand, we see these as, plus minus $100 a ton, they will remain stable around these levels. That's what we are currently working with. But you and me know that in these times, you have to look at this week by week and be prepared for anything.
All right, and which is why you always have a broad band of margin at 20 to 24%, and currently you reported 22%, which is bang in the middle of that. But, finally, before we let you go, Mr. Puri, two-part question. One, has competitive intensity been any more than earlier right now with other players looking at your segments as well? And secondly, even as the volumes increased by about 8%, your value growth was just much lower. When does this value-volume equation normalize?
See, as far as competitive intensity is concerned, frankly, we're no strangers to competition. Every year we have a new set of competitors across a large number of our categories. Now, it doesn't matter whether it's waterproofing, whether it is the adhesives business, whether it's the B2B business, and that continues. What we're seeing in terms of competitive intensity, which I would say has come back, is with the softer input prices, a lot of the regional and smaller players have also sprung back and are, a lot more active. You're seeing that definitely. We are also seeing a large number of Indian players in the home improvement sector now looking at, broader offerings and therefore looking at our categories as we are looking at theirs. So that is normal. That's happening. And frankly, as an organization, we will expect this to continue increasing as you go forward. If you have the kind of market shares and profitability that we have, obviously there'll be a lot of people tempted to take a little pie out of that. And our policy remains, hopefully we will delight our consumer and customer a little more than everybody else. So we keep our shares. As far as the second part of your question is concerned, I see volumes and value probably converging 6 months from now, because, the largest part of the input prices started stabilizing in the second quarter of last year. So exactly, in 12 months, therefore, you will be then on a like-to-like basis. I think the next 6 months, you will still have a volume ahead of value. Obviously, we will work on premiumization via innovation, via initiatives in the market. But I think it actually, over a period of time, is a good thing for the consumer, because the consumer actually is getting the product now more affordable than she was 6 to 9 months back.
Okay, Mr. Puri, thanks a lot for joining in. And once again, greetings of the festive season to you and your team. Let's take a short break.